Hey everyone, I'm Karla Dennis, and today we are pulling back the curtain on one of the biggest questions I get all the time. Hey Karla, how do the rich pay less in taxes, and is it legal? The short answer, my friends, is yes, it is legal, but you can use the same rules too. Today, we're gonna dive deep into 5 tax strategies high-income earners use to legally reduce their tax bills and build wealth. If you wanna stop giving the IRS more than you legally owe, keep watching, like, comment, and subscribe. So now, let's get after it. My friends, the tax code is a guidebook. It is not a trap. Let's change your perspective right now. Most people, rightfully so, fear the IRS. They think the tax code is designed to take from them, but that's not the full picture. The U.S. tax code is more than 80,000 pages long. Only a very small portion talks about how to pay taxes. The rest is filled with incentives designed to help you reduce them legally. That's the key word. The government uses tax codes to encourage certain behaviors, starting a business, hiring employees, investing in real estate, saving for retirement, even installing solar panels. Wealthy people know this. They treat the tax code like a strategy manual, not a penalty book. They play offense, not defense. Let me give an example. Why does the IRS give real estate investors so many write-offs? Because housing is a public need. When you solve a problem the government cares about, they reward you. You have the same opportunity as the wealthy. You just need to understand how the rules work. Something very important for you to know is entity structuring. The wealthy don't file like employees. Here's a big one, my friends. Wealthy people don't file their taxes as W-2 employees. Instead, they use business entities. They use LLCs, s-corp, c-corp to control their income and control how it's taxed. Let me show you how this works. Sole proprietors pay self-employment tax on every dollar of net income. An S-corporation owner pays themselves a salary, then takes the rest as distributions. The salary is taxed like normal, but the distributions are not subject to self-employment tax. That shift alone can save $5,000, $10,000, upwards of $20,000 a year or more. They also use entities to write off business expenses, to protect their assets, to separate income streams. They create layers of deductions. I'm gonna tell you guys a true story. One of my clients had 3 LLCs and an S-corp. Each served a different purpose: real estate, consulting, education, and intellectual property. With proper planning, my friends, we are able to shift income, increase deductions, and cut taxes. And she was able to do that by 40%. If you are running a side hustle and filing everything as a Schedule C, you, my friend, are leaving money on the table, period. Wealthy people use strategic deductions. It's not what you write off, it's how. Let's talk about write-offs, but not just random expenses, strategic deductions, thoughtful deductions. The rich don't just write things off, my friends. They plan their deductions with alignment with their income. In a high-income year, they prepay expenses before December 31st, buy equipment or heavy vehicles for bonus depreciation. They shift income to children through payroll and use their standard deduction. They use the Augusta rule to rent their homes to their businesses tax-free. And here's the big kicker. all of it is legal. You heard me, all of it is legal, but it must be documented and intentional. Let me give an example. One of my clients runs a digital marketing business. In Q4, we advised her to prepay software, buy a new laptop, and continue investing in her solo 401k. She cut her tax bill by $12,000. Planning is what separates the average from the strategic. Wealthy people are all about tax-free and tax-deferred income streams. Now, let's talk about those investments. The rich don't just make money, my friends. They earn it tax-free or tax-deferred. Roth IRAs, Roth 401ks grow money tax-free and withdraw tax-free in retirement. Real estate uses tax depreciation now, deferred tax gains later with Code Section 1031. Opportunity zones allow them to invest in targeted areas and delay or eliminate capital gains. Permanent life insurance, structured properly, it builds tax-free wealth and creates legacy. Let me give an example. I had a high-income client max out her 401k Roth, invested in real estate, and used cost segregation to accelerate the depreciation. She paid almost nothing in federal income tax while still growing her wealth. It's not about hiding money or doing anything illegal. It's about using the tools in the toolbox. The wealthy understand the power of a tax team. Here's the secret weapon. They don't do it alone. They have a team. They use tax strategists to plan their moves. CPAs and EAs file and help them stay compliant. They use bookkeepers to keep their records clean, financial advisors to grow their assets wisely. And let me give you a fun fact, my friends. Most of our clients at KDA come to us after they've overpaid for years. Once we implement a strategy for them and we are able to uncover thousands of dollars, sometimes tens of thousands, if you're serious about keeping more of your income, stop thinking of taxes as a once-a-year thing. Taxes are 365 days a year. I want you to understand this. Let's recap it so you really get it. Here's how the rich legally pay less in taxes. They use the tax code as a guidebook. They create entities to control how income is taxed. They take strategic deductions with precision. They invest in tax-free assets and tax-deferred assets. They work with smart, proactive team. And now, so can you. If this opens your eyes, hit that like button and subscribe. I drop new content weekly to help you legally reduce your taxes. And I want you to comment below which of these 5 strategies are the most exciting for you to implement. And if you are ready to stop overpaying Uncle Sam and want a personalized tax plan, click the link in the description and book a strategy session with my team. We've helped thousands of clients, and we are ready to help you. I am Karla Dennis, and now that you know better, you absolutely have to do better.